Hey, what's up, guys? We're going to be looking at NAS100. I'm going to show you what I believe could possibly happen. There's a couple of scenarios, but we want to go through it here. Now, if you're unfamiliar with what NAS100 is, it follows the NASDAQ 100. The NASDAQ follows the top 100 companies in the United States. I'm going to flash a few right here. And so we're talking about some major hitters here. So we want to look into it, what I believe is going to happen, what has happened already. Let's go ahead and deep dive into it. You don't want to miss it. All right, guys, so this is it here. I like to always start on the higher time frame because I want to follow the trend. Now, just looking at this here, you can see that we're in an uptrend, but recently it has been disrupted. And what I mean by disrupted is when you draw a perfect trend line, it has broke the trend line. And so one could say that, hey, price is reversing. We could be headed into a downtrend, but are we in a downtrend? This is how I determine if we're in a possible reversal or not. One, we want to find out where the neckline is. So I can pretty much just eye what the neckline is here on the daily time frame. I can say the neckline starts around this zone right here, around the area where it broke this trend line here. And we can see that price had rejected from this area multiple times here. So just drawing circles around this area where price has respected this area as support previously. And right here, it had broke. And you can say, hey, this is a retest right here, and it may continue to the downside. That's one scenario, and you may absolutely be right. But let's look at this here. Let's take all of this away. Let's go to the weekly chart. And now let's do the exact same thing. Let's draw our trend line right here. I can take it all the way from the bottom right here, which I don't necessarily have to because I don't have to worry about what's going on here. I want to start from this low here, the swing low. All right. And our uptrend is still intact. Now, how is our uptrend still intact? All you have to do is follow the ingredients of your uptrend. If you understand where your low is, your higher low, higher high, higher low. Whenever you are confused as to if a trend is intact, if you find your swing highs and your swing lows and you do that appropriately, then you know that your trend is intact. Here's my higher high. And then guess what? At a higher low here. So let's go back to the daily time frame and let's readjust if our neckline has been truly broken. So let's go ahead and clear this out here. And let's find our true neckline here. So I'm going to go out and spread my chart out a bit. And usually if you spread your chart out a bit, you can honestly find the neckline here. So one thing that I like to find is our swing highs. Now remember, higher high, higher low, and an uptrend. This will be my higher high, my higher low. So again, my low, higher high, higher low, and so on and so forth. So if I find my higher highs, then I can see where price may respect it. So here is my line here. Here's my level. And guess what? It respected right at this level here. My previous resistance is now my future support. In other words, my previous ceiling is now my future floor. And guess what? Price respected right off our support zone. Now, you see how I came up with two different scenarios looking at two different time frames. On my higher time frame, I found that there was a possible break and retest when I drew my neckline incorrectly. So you have to understand how to find your neckline, how to find your higher highs and higher lows in the uptrend, and your lower highs and lower lows in the downtrend. If you don't find that correctly, that can completely disrupt the way you're viewing your chart. So now that I've found my higher highs and higher lows, I see that we have a strong impulse move to the downside. Whenever you have a strong impulse move to any side, in this case, the downside, you're going to have a correction. Here is our correction right here. So here's our strong impulse. Here is our correction. Now, can we do something like this? Absolutely, we can still do that. Now, here's how you can almost profit in any possible trend reversal, okay? We see price come right down to our neckline. I love when price comes to neckline because you can pretty much profit 9 out of 10 times because price is going to have to respect this zone here. That's why I love price action way before I even throw in any indicators. Really quickly, I can throw in a Bollinger Band. Price is way outside of the Bollinger Band. But guess what? When I look at these candles, it was outside of the Bollinger Band here, 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 but it kept falling down. How many of you guys would have bought? But if you only respond when price action right here and buy when you're at the proper level, then it's going to respect and then you will see an upside movement. So here's our correction here. And if we're in a downtrend, as I mentioned, or at beginning of a downtrend, you still have to respect this here. So I like to call this the crossroad area. Because if we're still in an uptrend, price is going to respect this here and you can buy just like this, right? However, if we're at the beginning of a downtrend, we still need that correction and you could still buy here. So either way, if we're in a possible downtrend or an uptrend, you're going to buy. So for example, what I mean by that is if I were to draw a downtrend here, and let's say I didn't really know that I was in the beginning of a downtrend, and this is why I call it crossroads, because I can draw a downtrend here, I can draw an uptrend here, and this is kind of like a cross here. But right at this neckline, 9 times out of 10, you're going to see some sort of reaction just because at one point, buyer said this is too expensive, seller stepped in and it dropped. Now it's at the same price. Buyer said this is a nice price, so let's go ahead and buy. Either way, if you bought here in an uptrend at a higher low, you can profit. Now, let's say if you're at a downtrend. If you're in a downtrend and if I trap this in a channel just like this is considered a lower low right at this. So regardless, if you're in a crossroad area at a neckline, you will 9 times out of 10 profit because this is a lower low in a downtrend and this is a higher low in an uptrend. You will always see a response at this level. Now, how long you would take it is completely different because if I'm in an uptrend, I can take this and possibly continue to go even higher and do something like this, right? Now it's going to continue to make higher highs and higher lows, just like it's been doing. Higher high right here, higher low, higher high, higher low. And then continue to do higher high, higher low, and you get the picture. Higher high, higher low, and we're continue our uptrend. But if we were in a downtrend, again, we would have still bought right here. And then our lower high will come right off of this trend line at this area and continue our downtrend. So let's make this a little cleaner. It would do something like this. Our lower low to our lower high, lower low to lower high, lower low to lower high. So either way, at this zone, price has to respect it, right? Just like anything in any market, and I say this all the time with our students in our academy, if price is going to drop on sale, it's attracting buyers. It can't drop forever. It has to pull back at least a little bit to this area here if we were in a downtrend. It will go higher a lot if we were in an uptrend. Now, at this particular time, we're pretty much late. The move has already happened. So what I'm wanting to happen is one or two things. I want price to come back down to the support zone and where I may be interested in buying. However, if it drops past the support zone, now I know that I'm in a downtrend. That's the key area. If I see some sort of wick rejection or another white candle print at this particular zone right here, then I'm possibly looking to buy. So if I see price come here, I set an alert on my TradingView app. If I see some sort of rejection, I'm interested in buying, and I would take it possibly up to here or to this minor resistance zone. If it breaks lower and I don't see any sort of rejection, I'm going to wait for price to continue to head lower. I'm going to look left to see how much further it's going to drop. I'll see this area right here. That's why it's important to find your zones correctly. So if I draw this area right here, this looks like a pretty decent area where how far it can drop before it starts to pull back to attract new buyers. So around this zone here, anywhere here, maybe even this area here, this is a little bit more attractive, but this area right here too. So I'm going to give you some numbers around this area. If it's a downtrend, I will possibly buy. So around, let's say 16235. And of course I would swing trade that back up. So I would like to see something like this and then head back up like that, right? Or lower here. And then I will possibly buy here. Or I can wait for it to come back, retest this zone right here, and then sell here. So in a downtrend, if I see that break right here, I will wait for it to come, retest, maybe come down to this area, retest, and then sell again from this zone right here. So that's the scenario if price begins to drop and then we're seeing a downtrend. If price isn't in a downtrend and it continues higher, I would like for price to come down to the support zone right here. And then I would like to see some sort of wick rejection, buyer step in again, and then I would like to buy at this particular point. Now, oftentimes price like to come back and retest the zone here. If it doesn't, then we're just late to the party and then there's no trade, no valid trade at this point. But you never want to buy at this particular time when it's already made its move right here. And although you may get lucky and profit at this particular time, I always like to get in at the best deal. So I want price to come back down to the support zone here, see some sort of wick rejection, and then buy at that particular point. here. So again, some numbers here around 16994. So anywhere within this red rectangle, you want to make sure your rectangle is pretty wide because it can fall within the zone before it rejects to the upside or to the downside. So again, I wanted to show you what I like to call the crossroads strategy to a certain extent, because whenever you're at a neckline, you can 9 times out of 10 profit, whether if you're in a downtrend, possible reversal, or continuing in an uptrend. So that's it, guys. Let me know, what do you think about this? If this is the first time you've heard this, if this is an eye opener for you guys. Again, like, subscribe if you haven't already. Share this content with someone, because a lot of people struggle with trading and need some guidance. We like to hold your hands. We have an academy as well. If you're interested, link in the description below, where we hold your hands. We have a friendly community and we're there with you 24/7, regardless of where you live at in the world. In the meantime, guys, I will see you in the next video. God bless you.